Earlier in this course, you learned how to analyze and compare leases and evaluate leasehold interests. This first segment of this section will provide an overview of financial reporting. You will learn why financial reporting is important to real estate and become familiar with how the impact of some common real estate transactions can impact corporate entities and other users. In this segment, we will explain general concepts of financial reporting, list various ways financial statements are used, explain the importance of financial reporting to real estate, explain the key components of the income statement and the balance sheet, discuss how rent is accounted for in the reporting world versus the cash flow world. Financial reporting is intended to act as a common financial language for business for all stakeholders. In theory, an investor can use financial reports to measure the health of one company versus another. A real estate practitioner needs to understand the basics of this world so that they can accurately plan and advise their clients in their business decisions that involved real estate. Corporate users are the vast majority of real estate users, and real estate often constitutes a substantial line item on their financial reports. A valued real estate practitioner can use their understanding of the effect of real estate on financial reports to aid corporate users as they strive to meet their shareholders' earnings targets. Though there are a variety of reports prepared and filed in the financial world, two types of financial reports illustrate the impact of real estate as part of user decision analysis the most: income statements and balance sheets. Income statements show how much money a company earns and spends. They detail the revenue that a company receives through its earnings, as well as the expenses that the company incurs through its operation. While the value of the real estate itself may not appear directly on an income statement, the expenses of operating real estate, such as maintenance and utilities, do. In order to assure the accuracy of income statements, revenues and expenses must be accounted for as they occur. This prevents businesses from hiding expenses in future statements or counting on future earnings to cover up current shortfalls. These were two favorite tactics of companies that no longer exist, and the very thing that financial reporting aims to avoid. Click on the topics to read about how different aspects of financial statements can impact real estate decisions made by many users. The balance sheet shows what a company owns and what it owes at a point in time, in the form of assets and liabilities. The assets represent what a company owns or is due to receive, while the liabilities represent what a company is obligated to pay. Assets, such as property and equipment, must always balance against the combination of liabilities, such as loan payments and other payables, and equity. Assets and liabilities may appear differently on a balance sheet based on the attributes to the transactions. Here are a few key concepts. Most corporate users do not treat real estate as an investment. That is, they use it as needed to meet their other business goals. There are two aspects of building ownership, though, that directly implicate a user's financial statements. The book value for that property must be listed as an asset on the balance sheet, and depreciation and related costs must be listed as business expenses on the income statement. According to the U.S. accounting standards known as GAAP, rent must be straight-lined through the reporting period. This means that free rent periods aren't really free in the financial reporting world, as the entire rent over the term of the lease, including any increases or decreases, is straight-lined or averaged over the term. This causes rent to be reported as a steady amount each year. You have just seen an overview of financial reporting. You've learned why financial reporting is important to users as they are large organizations, and become familiarized with the rules and reports used in the financial reporting functions of a variety of corporate entities. In the next segment of the course, you will perform a learning activity in which you will analyze the information and effects of real estate transactions on a variety of financial statements.